Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. I guess you can tell it's been a long day. Lots of mixed signals, lots of cross currents, but I guess that's the way it's been. You know, you've had stock select. Some things have been long, some things have been short. You know, a little lack of muscle memory day to day. Some sectors weaker than others, but all in all, things to do if you're prepared. And I guess today was a kick save and a butte for the S&P cash. Why is that? Let's take a look at the chart. Go to the chart and you will see that, you know, here we are, the old resistance. Oops, sorry. Whoa, look at that. Grabbing it. The old resistance that has now become support. Look at that. Isn't that a technical phenomenon that we talk about in technical analysis land? Well, that's what happened. You had a lot of micro moves, right? When we broke this rising trend line, pow, we held it. Broke this rising trend line, pow, we held it. Same way we've been controlled by this downtrend where we haven't been able to get above it yet, or not. So here we are. This morning I talked about in the Express whether or not we could hold this prior pivot here, which was about 2130, and we did and came off it. So we're still just in this range, you know, below the 21 days. So a lot of people are a little cautious, which is cool. That means you could test levels. And until that changes, until we get some kind of catalyst to break us out above this, will remain very stock specific and sector specific. All day long, everyone was pointing at the IWM, you know, which I hear you. You know, IWM broke this level here. IWM broke the level of 120. So that means the small caps broke the level of October. And in October, the S&P cash, when it broke, went as low as 2114. So the Russell is basically where the S&P was. I don't know, 30 handles ago? So it's a mini divergence, which people, I hear you. IBB, same thing. You know, IBB is just trickling lower. Okay, hasn't made a new low yet, but, you know, not a hell of a lot to do. It's still caught in this downtrend by the 8th day, ever since breaking this. So, but then you have the Qs that filled the gap and have been showing relative strength, but every time, you know, you think it could digest and go, it, you know, fails. You know, last time you had a little engulfing move was there, and then you had your red dog reversal back to high. So here is a little bit of a doji smack on the 8th day above the 21 day. So still fine, just a little choppy. So let's go to individual plays. So this morning I talked about Apple. I said the 50-day is compelling support, but let's see if we could buy versus a 15, 30-minute low. A lot of people are like, red dog, what's a 15, 30-minute low? It means when a stock is down $4 because of earnings. It could be down 5, it could be down 6, it could be down 7, it could be down 8, it could be down 9, anyway, you don't know. So when it's down 4, and then at 9.50 it's only down 3.5, you then have that pivot low, and that is your 15 or 20 or 30-minute low, depending on when that happened. So then you could buy versus that low, saying, okay, it's down $4. I have price discovery. I have a point of reference. Let me buy here versus that low because I now know where that is. And if it breaks it, I'm out. If it holds it and continues to rally all day long, I might have a good entry, a better entry than if it opened up. So let's just take a quick look at Apple. Apple right now, not a bad bottom tail. You know, a little bit from no man's land, you know, because a lot of people were waiting for it to hit this, which it didn't. Now look at it, what a quick thing, right back to the 21 day. And now, you know, it's not technically broken. It's still, you know, from where it came from. So we'll see if we fill this gap at some point tomorrow maybe. Okay, what do I mean by the 15, 30-minute low? You can look here on your 5-minute chart. We look at different time frames. So here it is. This was your, this was one low. Okay, this low happened at what price, at what time? 9:35, so here's your 5-minute low. The aggressive guys might go against the 5-minute low. Okay, then here is a higher low. Okay, this higher low happened at 10 o'clock. That's your 30-minute low. So you could have been a buyer here, okay, at around 1390 versus the morning low. That's your stop of 1331.60 cents. And then that was your tier 1. And then if you're looking for tier 2, because a lot of people want to know what's Red Dog's tier system, so I'm giving you a little lesson in time frame and tier frame, or tier something, anyway, so you're not tiering. 5-minute low, 30-minute low, higher low. Buy here. Edges up, edges up, edges up. Ooh, look at that, it's in the gap. It could do its new price discovery, because look at the size of that. So here's your tier 2. Maybe into this, you're down to tier 1. and then you say, I'm going to hold this thing. I got a great price in Apple, and I'm not going to give it up unless it breaks the low, and then all the way up to 1560, 115.60. So you could have made $1.60 on that, and then sold it at the end of the day if you don't take overnight risk and say that's just my intraday strategy, and you had 60-cent risk for $1.60, and you could have hit tier 1, tier 2, some cash flow in the middle, so you rang the register, as someone famous out there says. Now we'll see what's up with Apple later, okay, tomorrow. If it opens up down a little bit, goes into the gap, we'll see if it fills the gap, and all in all, it's probably going to be a rangy trade where you're going to have to just be a little careful with it because, it's going to take time. All right, and then, you had Google, Amazon under pressure. One of the thoughts, though, for the morning note was maybe they take, Netflix green because it already came out with earnings. Okay, maybe they take Facebook green because it hasn't come out with earnings yet. So you look at Netflix. Netflix, went green. It still looks good, still flagging, still, kind of best in breed formation. But if you were prepared when it was down 60 cents, look how fast it happened. You could have made fast money. Isn't there a show about that? Here's your 1 minute. Boom, look, let's go to the 1 minute chart. Yeah, some people trade on a 1 minute chart. There it was. It opened down and pow. Took out the 330 range and pow. So this thing was up $1.50 before you could even blink by 10 o'clock. That's what I call fast money. I wonder if those guys over there still trade. Anyway, here was your move from this area back to there, and you could have taken it whenever you wanted it. Let's see what it looked like on the 5 minute. You probably couldn't even see it so quickly. 5 minute, yeah, it just boom. Actually, this was a little red dog reversal in here too, because this was yesterday's afternoon low. Took it, reclaimed it, and then boom. So anyway, Netflix was a good strategy. Just read the morning note. If you're a member of Redler All Access, people always ask me when I do the recap. If you come back to me, what's Redler All Access? It's a note that I write every day. It's got about 25 different stocks on it with levels, support, resistance, action areas, sectors. What I'm looking at, what I'm long, what I've been long, and my game plan on paper for you to use. And if you have the same thoughts, maybe it gives you conviction. If you had opposite thoughts, maybe it has you think twice. And it's just a useful tool that's made every day as real time as possible. Because I started at 4:45. Let's go back away from the sales pitch. So this still looks good. Never even broke really below this pivot here of 125.75. Where did it go? What was today's low? 125. Oh, matched it. Anyway, we'll see what happens here. It looks more bullish than bearish. Google and Amazon definitely, a little weird. Not weird, but, they're shaking the tree around before earnings. But the beauty of this is on this pullback, if you think post-earnings, and it doesn't mean it's going to happen, and you think it's going to happen, on this move down, back to the 816 level, I just draw that wrong, you could have bought some options. So I bought some 840 calls, thinking that if it happens to have a great report, goes to 900, I'm not going to be in it. I'll trade it after hours. So what's good about that too is if it's here, has a blockbuster report, trades through 840, you could buy it through 840, holds 840, goes to 880, you could trade it after hours, make a lot of money, but also have some calls, okay, just in case it happens fast and you don't want to deal with it. Okay, so but it's better to buy it down, $24 from the highs when the premium's getting sucked out when you're not paying a spread than buying it into strength up here, which we didn't do. We actually traded up there. But anyway, little wishy-washy, all in all, still hanging in there well. We'll see what happens here the next day or so. Amazon also went down a little further than I would have thought. Unfortunately, I thought I had a cute trade yesterday where I sold the 820s. What's it called? I bought the 820s on this day, thinking that it was a good time to buy versus the highs. All of a sudden, it was up $4 yesterday. Sold the 820s. Came in at the end of the day, I'm like, ooh, I sold it up for, it's down for $8 middle for Amazon. Let me be cute and buy the 860s, because if Amazon is blockbuster, which it might not be, it's just speculative money, because if it happens, I won't be in it because I don't take it into, unless I trade it after hours. So anyway, P.S., I bought a little bit more today as it came back in a little further than I thought. But the beauty here, again, is if it's a good report, you now have defined resistance. If it gets above this 847, stays above it, boom, you have a quick after hours trade. But it's got to stay above it. Remember Apple yesterday, that pivot that it couldn't stay above? We talked about the pivot prior. The pivot was right here. Okay, it pushed above it for 5 minutes, not even, maybe 3 minutes. Went to 122 before coming back in. Sometimes that happens. Well, we'll see what happens with Amazon. But I took a little bit of Amazon also, and Google, both of them, because if I pick one of them, and I picked the wrong one, I'll be upset. So I have a little bit of both, speculative money, so if one works and the other doesn't, it'll counteract. If they both work, it'll be a nice little speculative payday. And then hopefully it's tradable after hours, kind of like Tesla was. Tesla was very tradable for a lot of people on the VTF. Congratulations if that's you. Let me quickly see where Tesla's trading right now. 213.26. We'll see how that goes. Talked about it on the VTF, and I think on Twitter too. I said it's caught in this real tight range. What do I mean by a tight range? Here it is. Hasn't done anything in quite some time. A lot of people would love the Tesla story to work out. A lot of people are actually bearish on it. Even Wall Street Journal today came out with a bearish article. So in my head, I'm like, okay, let me buy some of the 200s, because if it's good, it could see a quick move to 213, 215 the 200 days. So buy them at $6, $7, and you could be 20. That's a nice risk reward. Or when the numbers are out, and if you can figure it out fast, this is your pivot. Your pivot to buy is around 207, gets above 207, maybe you sell it at 213. And I think there are a lot of guys on the VTF that did it. They didn't take options, they traded it after hours, and boom. So now if we were to hold this area, your next area comes in a little bit closer to 222. So different levels. Plus, I think it's trading 213 now. So if you happen to have taken the $200 calls around $6, $7, and you're like, ooh, I could double my money. I want to short, 213 or 214. You short it, and then you say, okay, come Friday, I'm just going to, deliver my calls as per the short, and I don't care what it does, the rest of the week. You can do it that way too, just to lock it in if you're worried. I haven't hedged it. I'm just sitting in it and figure it out. I traded it once after hours from like 209 to 212, and a lot of guys did from 207 to whatever. And then I had to come in here. But we'll see. Now tomorrow we have a big gap up. It would be awesome if there's a big gap up, it holds, and Tesla gets back in play. It's a lot more fun to trade when Tesla's in play. Not out of play, not just a news-driven mess. We like it electric. Thanks for writing that in. No, I'm kidding. I don't have a teleprompter. What else went on today? Oil. That was a little wonky, right? The number came out, rallied, and then just sold off. Not even get into that. The banks were strong all day. The banks, look at Goldman Sachs. In the morning note, Redler All Access, which I write every single day. Last week, I talked about levels that the banks could get to. Said Goldman Sachs can get to 180. And that was right after the report. I said if it holds 171, that's the next target because there's a void. It's on its way. My target for Bank of America was 1680. It's got there. Okay, why was my target there? I figured it would fill this gap because leftover gaps love to get filled, and that happened. So if you were long it from this engulfing day down here, okay, you made a nice move. Hopefully you trimmed some. Citigroup, it'll be nice to see what happens tomorrow. It's very tight. I've been long the options for a little while now. And today I bought the stock. Why did I buy the stock? Because it poked its head above this 50. It'd be nice to see if it could actually extend. The same day that I gave all those other targets, I figured that Citigroup can come to and see perhaps this, which is not a blockbuster trade, but close to 52. Thought it would scream through this better, but it hasn't. So maybe tomorrow, if the futures are up, we get a little paid on that. And what else? CMG. Oh, God. Look at that thing. Dead money. Somebody buy that recently? Not that I know of. Anyway, kidding. Came below, broke below, broken name. Been broken for a while, and I guess we'll see what happens in the future there. I guess a lot of people don't like burritos because there's too many carbs. Health kick. Same thing with McDonald's, right? McDonald's, I don't think a lot of people are eating McDonald's anymore. Just, a lot of people a little bit healthier maybe. Well, anyway, it's below the 200-day McDonald's, and it's unhealthy. Been below the 21-day and 8-day since here. So I know it's a industrial behemoth. Perhaps everyone's eating a little healthier, or not. The metals. This morning I tried the metals. Everyone's like, oh, Red Dog, the metals. You don't like the metals. Yesterday was a strong day. You could push. I'm like, okay, down futures, down market. Maybe they go after the metals. And you know what they didn't do? They didn't go after the metals. And the GLD gave you another erratic, random day in the midst of this little range, which I hate. Anyway, here was your one little quick move, and then came in, went up, came in. You know what? We'll see what happens next. Here's your inside range for those of you that bug out about the metals, which I don't know why. GDX, same kind of thing. Looked as if today it could have traded above this level and filled this gap, and it would have been cute and fun, and there's the 50-day. Instead, came off and said, not yet. So, we lost a little bit of money trying that. I actually went with the nugget and went away from it. So with all that said, this is not a perfect tape. It's sometimes not fun to trade. One day to the next, or there's no muscle memory at times. But the right trade usually works, and that's what you have to go with. You can't go with the maybe it's a right trade, and then you can't go with you know what, I'm upset. I just want to throw something against the wall. I'm going to break the rules, because that's how you get put out of business. Stick to your rules, stick to your disciplines. Look for the A to B plus setups. Know your levels. Don't overtrade. Don't get frustrated. Don't punch holes in the wall. You break keyboards, because that doesn't do anything for you. Not that anyone does that. I'm just saying don't do it if you like to do that to blow off steam. I'd rather you take a spin class and go walk your dog or go for a run. A little healthier. And that's it. Tomorrow's a big day. Amazon, Google, Amgen. Tomorrow morning before the open, Twitter. I don't know. Everyone's like, why are you in Twitter? You bought Twitter last week and you bought a little bit more. You know what? Everyone hates Twitter. Even Twitter hates Twitter. But I figured, you know what? I'll be in some calls just in case it's a good report, or just in case they announce some kind of takeover with the report. Worst case scenario, I lose my premium paid, and and it's not even done yet. I have December's and I have late November. So if it happens to get hit, which it usually does after earnings, every single time after earnings it gets hit. Always getting hit after earnings. Maybe this time it doesn't. So many times. Hit after earnings. Remember this one? Hit after earnings. Hit after earnings. So maybe this time it goes up after earnings, or not. I'm a little delirious today. Anyway, we'll see what happens. I'm in some of the 18s, so I'm not looking for illusions of grandeur. I think that if this thing does get taken over, maybe 22. This gave us our move without getting taken over, because even down there, I'm like, maybe it gets taken over at 22, 23, and then, here, it's like, maybe it'll take it over at 26, 27, and then here, like, it's at 25. Let me take off half, and then pow. And then lose money on the other half. But anyway, up here they wanted 28. Down here, maybe they'll take 22. We shall see. It's all just thoughts. See you at the morning call. Have a great night. It is hump day. Tomorrow's Thursday. Bye-bye.